it's Lauren Perreault from RE/MAX with your weekly home update for the Portland metro area with data through the week ending September 15th, including, of course, Clark County and Vancouver, Washington. So it finally happened! Last week, the Federal Reserve cut interest rates by more than many analysts expected. How much impact did this have on residential mortgage rates and the Portland metro real estate market? Well, I've got that, plus a surprising new trend in sales prices and the rest of the market stats that you know and love. Let's take a quick look at the numbers. I mentioned at the top of the video that we might be seeing the start of a new trend in sales prices, one that's good for homeowner equity and maybe not so good for buyer affordability. The average sales price increased by 1% over the previous week, which appears modest, but the average was approximately 5.6% higher than the same period last year. This is the second week in a row that we have seen similar numbers in our year-over-year data. So far in September, we are tracking around 4.2% higher than September 2023, following smaller gains of 2.3% in July and 2.7% in August. The supply of homes for purchase increased by another 1%, not a surprise given normal market metrics for this time of year. The number of homes listed for sale increased this week, but it remained consistent with what we saw last year at this time. There was some relief from price reductions. They are down about 20% from last week's record high for the year. The number of new purchase contracts agreed to by buyers and sellers last week increased from the week before. So, demand was slightly higher, but we are still roughly in line with last year's numbers at this time. Again, last year at this time, interest rates were 7.2% for the 30-year fix on average and rising, which is significantly higher than what we are seeing now. So, I still believe that demand this year will be higher than last year, but we're not seeing it yet. Moving on to mortgage rates. The best mortgage rate I could find advertised on Thursday morning was 5.625%. That represents the best case scenario for the 30-year fix. That's up just a hair from the 5.5% that I've been tracking since last Friday. I have mentioned a few times before that the Federal Reserve's Fed funds rate is not directly related to mortgage rates, so I'm not surprised to see little change in mortgage rates following the Fed's big cut of a half point on Wednesday. It may take some time for the effects to be reflected in mortgage rates, or they may have already baked it in anticipation. Looking forward, we'll be watching for the effects of the Fed rate cut. The markets didn't seem to know what to make of that surprising 0.5 percentage point cut. They were expecting a 1/4 point. And we ended up, at the very least, it appears that we have received one of the classic knee-jerk reactions from investors. So, I'm hoping that the markets will settle into a new trend by this time next week. If you have any questions or thoughts, feel free to call me at 503-683-1885 or send an email to lauren@pdxhomesforsale.com. Subscribe to our newsletter and or YouTube channel to make sure that you don't miss any updates, and feel free to share the video with anyone who may be concerned about the real estate market in the Portland area. Have a great week, and I will see you next week. However, it'll be from my vacation, so we won't have a pretty green screen. Have a great week.